All right, guys, this is going to be an important episode because we are going to be talking about things to watch out for with the silver and gold price this coming week. Also, my forecast for gold, silver, and copper by the start of December. We're going to be talking about some updates I made to the forecasting model regarding that. And then also we're going to be talking about the longer term related to stagflation as well, because I touched on that a little bit yesterday, but I want to actually add more information in today's episode. So it's going to be a big one. So lock in. And before we get started, please hit that subscribe button down below so that you can join the fun and always stay abreast of gold and silver movements. And I talk a lot about where I think prices will go. So if you want to stay attuned to that, definitely subscribe down below and hit that like button while you're down there as well. Helps to get this content out to more people. So let's start here with gold, because gold has really been leading the force and silver is pretty much falling right behind. Now, as we see here with the indicators, and again, I like to use these more so for near-term movements. So these are the daily movements. And as you can see on the daily, we've been pretty much a little bit above overbought territory. So I wouldn't be surprised if we will really start to see things, the rate of price increases begin to slow down or decelerate a little bit this coming week. As you can even see here with the histogram, the change of growth here, the rate of change was pretty large early on last week. And then as we've been going from day to day, the gap has been slowing down a bit. You can even see that here in the RSI as the curve here was steeper, and then it started to kind of taper out by the end of the week. So we may start to see things begin to slow down a little bit here in gold. And in addition to that, we can say the same thing for silver, though silver may have a little bit more room to go as it's not just above overbought yet. So we may have a little bit more room to go with silver in that regard in the near term. Now, regarding my forecast for December, and this is pretty much around December 1st, let's not start with copper. Let's start with gold, because again, this kind of really leads the front here or has been leading the front. Yesterday, I made a video regarding my CPI forecast for November. So I put that in here. And if you want to check out my CPI forecast video, check out the video from yesterday. This is where we are currently for the 10-year yield, real yield, M2, GLD, volume, and then we also have dollar futures as well. And we also have Bitcoin, and this is pretty much what we have here. Upper limit 1959, central limit 1841, lower limit 1724. Because things are very bullish, I would likely think that we'd be somewhere between 1841 and 1959. So let's just call it a cool 1900. So relative by the end of or around December. Let's just say we're somewhere in between. So we take that number and then we put it in here. And let me just scroll back here. So we have the CPI number there, the same thing. Real yield. We have with the gold price around 1900. This is my estimation for SLV volume, current dollar futures, what I think Bitcoin may be by the end of the month. And this is where we could be. So again, upper limit $26.12, central 22, lower 1985. Because these guys are really low, I would expect that we will be somewhere. I think honestly we'll be somewhere. Currently we're at $25. We'll be somewhere in between these two numbers, and I wouldn't be surprised if we're actually closer to $26 or so. So this is essentially my band, my forecasting band, and I think we're going to be closer to, or I think we'll be in between my central limit here and my upper limit here. So guys, when you watch Kitco, for example, and you see a lot of people getting brought on saying, hey, this is my forecast a month out. I think, on a low end, we might be here. On the high end, we might be here. This is essentially what they're doing. They're forecasting, and this is using a multiple regression. So this is what I'll give to you guys, and I'll make it available to you guys soon. so you guys can actually do this yourselves without having to watch Kitco and just, hope that the guesses, or not the guesses, but the estimations that the guests make are correct. You can actually just do this yourself, plug in numbers here as you see fit, and you'll get kicked out your own band here of estimation. This is just mine based off of my estimations. But if you have your own estimations, it'll update accordingly. This is based off of historical data as well. So we'll end the forecasting here with copper. And copper is interesting because this will actually lead me into our stagflation discussion. Because we're seeing crude oil begin to lessen. We're seeing dollar futures rise, and we're seeing Chile exports actually drop. Chile exports have actually been dropping over the past couple of months, meaning, and thinking about that, China buys about 50% of the world's production of copper. So this would tell me that maybe China is actually having lessened demand on copper. Now, mind you, Chile's exports, the majority of it is copper. So that's why I added it to this model. So it's been dropping down over the past couple of months. And to me, that is a forecast into what we could expect for global growth, meaning potentially, if this continues, will global growth actually lessen? And as we hear from the IMF and others about this 2-track recovery, maybe this is beginning to really start to play out as we're seeing Western countries recover, and the countries in the global South struggle a little bit. So here's my prediction interval for copper for December: 458, 410, 363 as of right now. So again, we're talking about a slowdown in growth, and that leads me to my discussion of stagflation. Now, yesterday I did say, hey, inflation is running really, really hot, and it looks like it's going to continue. Now, growth looks like, aggregate output looks like it may also slow down. We talked about that when we looked at real rates relative to where we should be seeing inflation. I put an episode out a couple days ago about a friend asking me like, hey, well, why are yields not rising aggressively with inflation? Why are they just kind of muted? And I said, well, hey, this might actually be speaking to expectations of growth prospects as well, because real yields have been getting pulled down pretty aggressively. So real yields are seeing the pain of that inflation, but nominal rates, you're not really seeing it too much. So pretty interesting to note. Now let's take a look at employment, because this is what we talked about yesterday. Basically, 2020 forced a lot of early retirement, topping around 3 million in the United States. This was released in October 2020, or October 22nd. This is what I was insinuating in yesterday's episode, that there was a lot of retirement from baby boomers, and their unemployment rate has been plummeting dramatically. The reason why is because there are, a lot more left the workforce, and some by their own design and some by, pretty much not so much. If we scroll down here, I won't read this whole thing. I'm just going to scroll down to the meat of this that I think you'll find interesting. Basically, for the majority of the article, they say that a lot of baby boomers who had assets, so like really rich people, they're basically able to say, hey, take this job and shove it, because my assets have ballooned to extreme levels. So I'm going to take an early retirement. However, there are some who aren't so lucky. So here's this part I want to read. In a blog post, Faria at Castro said it remains to be seen whether the excess retirements are permanent, whether these people come back or not, and how many, if they do, will have an outsized impact on the U.S. workforce, which is still missing more than 5 million people from pre-2020 levels. So here's the thing. If more people start flooding into the workforce, we may actually start to see a rise in unemployment for a particular period of time. Now, I'm sorry, the labor force. So what exactly is the labor force? These are people who are actually actively looking for jobs. So these are the people counted in the labor force and in the unemployment metric. Those who are not actively looking for work are not counted in these metrics. So if you then say, hey, I'm looking for work now, but I'm unemployed, that number begins to balloon. So imagine that, hey, there's excess retirement happening here. Will these people come back to work? And what would that catalyst be? And I think one of them is hinted at in this article here that was written actually back in 2008. Inflation gives retirees two choices: cut spending or go back to work. And essentially here, and man, I don't think you'll be able to see the bottom here, but basically I'm going to read this part and I'm going to go down. You might see it kind of cut off there, or maybe I can actually mess around with this. Hold on. What these retirees forget, he says, is that even though inflation over the past 80 years has averaged around 3%, let me see if I can move this. Yeah, buddy. All right. Even though it's averaged about 3% a year, there have been prolonged periods when inflation averaged over 6% or more a year. During such periods, Sestina says, retirees essentially have two options: cut back on spending or return to work. Well, that would essentially be the catalyst that we could see causing unemployment to rise, which would be, a 6% or more year of inflation. So are we going to be seeing that this coming year in 2022? Well, it seems like currently right now we have 6.2% inflation. My forecast model on the low end basically gave us about 7.5. Whether we see that or not remains to be seen. But if on average for the next year we see inflation around 6%, that would be insane. And it would cause a stagflationary event where we would begin to see retirees come out and have the unemployment rate rise while inflation is elevated and while growth prospects are low. So is stagflation a possibility? I say, yeah, it is. We just need to see if, will chickens come home to roost, essentially. So as of right now, things are looking pretty good for gold and silver prices. Again, I gave you my forecast for December. Let me know what you guys think. What are your forecasts? And I should be able to get these models out to you soon. So again, I apologize for the wait. Hit that subscribe button down below. Hit the like button. Thanks again for watching. Have a good start of your week.